Welcome, everyone, to the PCS Like a Pro show. I'm your host, Megan Harless, as always, and I'm excited for you to join us today as we are going to start doing a series of episodes breaking down the VA home loan and all the details that you need to know about it, because we know coming up next year in the spring, much of our community starts looking for a home and purchasing a home and utilizing their VA loan. Before we jump into that, this might seem a little off and weird for you because we're coming to you on a Tuesday and a little bit earlier. So we are going to be working on making that switch to having our shows on Tuesday at the slightly earlier time, because life at our new location is a little bit off. And so, things work well at one location and you PCS and you move, and then, your routine gets switched up a little bit. So that's kind of happening here. So get used to seeing us more regularly now, Tuesdays and a little bit earlier in your morning. Go ahead, grab your cup of coffee and sit down and join us. It's going to be really, really great. So joining us today, we've got Michelle from Caliber Home Loans. Welcome to the show, Michelle.
It is wonderful to be here with all of you guys. Hello, hello.
Can you just take a moment and tell us a little bit about yourself?
Absolutely. So I am Michelle Crumley. I am a 30-year military now veteran spouse, Navy spouse. My husband retired a little over 12 years ago. We had a number of moves, PCS moves in our career, so we know exactly what the stress points are, and we've used our VA loan quite often over the years. And I've been in the mortgage industry, the real estate field and the mortgage industry now for over 22 years. Geez, I'm getting old. And it is all focused really around how we can educate and support the military community. So the VA loan, working with our real estate community and education of the VA loan, working with the clients and customers and our military and veterans and their families. It is a true passion of mine, which is also why I love when I get the opportunity to present and to work with you guys. And I did want to say too as well, right? Friday is Veterans Day. So for all of our active duty, as well as our veterans, thank you guys so much for your service and sacrifice, and for all of the spouses out there, because we know that we served and sacrificed right by their side. So happy Veterans Day, everyone.
Yeah, absolutely. And thank you for that. So like I said, we've got a really great show lined up for y'all. So we're just going to dive into all the nitty gritty and the details and everything that everyone needs to know about the VA loan, because I know when we're going through the process, I was like, I know like this much of like this much. So it's important that you have someone that you know that you can trust and is knowledgeable of this. So we're going to try to make this a little easier for everyone. So we're going to start first with talking about that lender piece of things. When people are looking for a lender, what are some questions that the family should be asking the lender to make sure that they're a good fit to work together?
So I love that question. And it's one of the things when I have the opportunity to talk with our military community that I bring home. I tell them that the only thing that they walk away from a conversation with and remembering is always to find that expert, because not all lenders are built the same. So finding that lender, the loan officer, as well as the company that understands the military client first and foremost. And some of those questions, right? So you need to go knowing that there is this thing called the VA loan. And if you're not asked about it, you should always be asked, have you served? If they don't start a question on their conversation with that, then they're not even thinking about the possibility of military, of the VA loan itself. So always, if they haven't mentioned it, that's a huge red flag. If they talk about how difficult it takes, or how difficult VA loans are, or how time consuming they are, or horror stories about a VA loan, they are not military experts. The VA loan is one of the easiest, if not the easiest, loan program that is out there. And if someone is having a difficult time doing it, it is because of their experience, not because of the loan program. So some of the things that I tell individuals to always ask: how many VA loans have you personally closed? I'd like to see some of the testimonies of those families that you worked with on their experience with you. Do you have access to the VA's online portal so that you can order my COE for me? If they look at you and go, what's a COE? Run.
Red flag right there.
Asking them, how long does it take them to typically close a VA loan? If they say longer than the typical loan, longer than 30 days, you don't have an expert. So you want to make sure that they have a process that you've asked about it. You've asked about their history and their knowledge level. You've ensured that they've asked you if you have served, and then just listening for any cues that give you a kind of that rub you the wrong way about how they feel about the VA loan or their knowledge on the VA loan.
No, those are definitely some good questions. And I could probably safe to say those are probably similar questions you should be asking like a real estate agent as well when you're shopping around trying to find a realtor to help represent you, to help you find your home, is their knowledge of that VA loan as well, because they're going to be the ones presenting your offer on the home, and you want to make sure they can be able to adequately communicate with the seller's agent about the VA loan, and then, hey, it's not this big hard thing, it is easy, and here's everything, they've got it together kind of deal.
One of the questions that I love for both the lender and the real estate agent is to ask them, what are some of the strategies that you use to help encourage the seller to accept my VA offer? And if they don't have one, or if they stumble over that, then you don't have someone that is, again, really apt to be your advocate.
Yeah, no, absolutely. And if anybody's got questions as we go through today, please drop them in the comments. Michelle will answer everything. And I know if she doesn't know the answer, she'll go find the answer for you and bring it back to you, because we've got the expert here. So if you've got questions, now's a great time to ask those. So we know a family knows that they want to buy a house and use the VA loan. What should they be doing in like this first step of the process?
So ideally, before you have found the home, and in many cases, before you have found the real estate agent, you have found your lender, right? Because why even start looking if you don't know what you're looking for? You might be able to look at a lot nicer homes or larger homes or in a different area than you anticipated. Or it might be that you need to kind of scale back a little bit on what you've been thinking once you have talked to that loan officer. And they can make some excellent recommendations as well for real estate agents. So ideally, you want to put the horse before the cart. But then when you are thinking about utilizing your VA loan, one, finding those partners that are going to be knowledgeable, and then really kind of putting together, what is your want list, right? Are you looking for a fixer-upper? A fixer-upper and a VA loan may or may not work. What is the time frame? Are you looking or talking about VA assumptions? A lot of different things that'll go into that. I truly believe that if you have an inkling that you are going to want to buy in the next 6 to 12 months, it is never too early to start a conversation and find that loan officer and do your research and education so you are armed with the information when you are ready to proceed. It creates a very smooth environment if you start with education. Let's just talk about theoretical. What would it look like? Explain all the ins and outs of what the loan process looks like, time frames, then go through the formal pre-approval, which we'll talk a little bit about, then on into making those offers and then closing on your new home.
Yes, absolutely. That being able to look ahead and get an idea of what's out there on the market, what you can afford, and what you can afford might vary depending on areas. We always know we, as military spouses, we get very itchy finger around order season of like, I need to go find a home. I need to find a home. The market has maybe low inventory and all of those little things that kind of compound our stress, and knowing it's okay to talk to lenders in different areas where you potentially might be going, and you don't really need to lock anything in until you have those orders in hand, but you've got somebody that you can maybe trust. You've established that relationship. So when it's go time, you say, hey, here's our orders. Let's get this process going. So you mentioned briefly about a pre-approval. Why is a pre-approval so important? I remember back a long time ago when I was in my young 20s, thinking like, we find the house we love and then we figure out the financing to figure out how we afford it, right? But now that I'm more mature in my 30s, we hear a lot of like, you need pre-approval before you go looking at houses. So why is pre-approval so important now?
That is wonderful. That is a wonderful question. So pre-approval means that you have completed the basic application. So you've provided to your potential lender your specifics, your income information, documentation. They've pulled credit, they've taken a look at your assets, your debts, and they then are able to, through the VA online system, do a real quick see. Does it look like everything that you have said matches with the parameters of the VA loan, and then what you can afford? And that VA pre-approval, that loan pre-approval says, based on what you have provided, now this has not necessarily been looked at yet by a formal VA underwriter. It is not a loan commitment, but based on everything you've provided and looking at this and running it through VA's general guidelines, if everything is correct, you'll have no problem, that pre-approval, and you are good to whatever that specific loan amount is. And you can take that even farther. So one, it lets the real estate agent know that you're serious, that the real estate agent is presenting offers to sellers who are going to take that property off the market, right? If they accept your offer, they take their property off the market while you guys are going through the closing process. So it lets them know that there shouldn't be an issue with the financing either, right? Because nobody wants that to be held up at the 10th hour because there was an issue with the mortgage on the borrower's side of the quarter. Yeah, what was that? So then if you want to make an even stronger offer, especially in the market that we have been in, right, that we're coming out of, you can actually then ask for that pre-approval to take your actual application and all of the formal documents and have it actually reviewed by a VA underwriter. They will issue then the commitment on that loan pending all the property stuff. But your credit stuff, income, assets, debts, all has already been reviewed and approved by the VA underwriter for that company.
No, that's definitely a good explanation of why it's so important. I know when we were going through the process, looking at what our pre-approval amount was and what we were willing to spend on a mortgage payment a month, it kind of makes a really big impact of figuring out how much house you can afford and where you can afford that house at.
Yep.
Living where we're at, we're on like a weird little border area. For whatever reason, the Army keeps sending us to living on border states and towns on border states. We haven't figured out how to get past that. But looking on both sides of the river, it's like we could afford so much on one side and then afford a totally different amount on the other side of the river. And so it came down to a lot of what kind of area were we comfortable with and what side did we want to be on, and taxes played a role into that as well.
Oh, yeah.
So we got a couple comments here that I want to get to real quick. We got Destin from Germany joining us and how they've used the VA to purchase their home as well. So she's got a question. What happens if the pre-approval is one price, but then you get to the commitment is lower than the pre-approval? Does that make sense to you?
So is that if you got pre-approved, let's say for a purchase price of $500,000, but then you find a home for $400,000, or your loan officer told you were probably good at $500,000, but then when it went to underwriting, they brought it down a little bit. So I'd like to know just a little bit more, Dustin, if you can give some specifics. I would love to answer that for you because that's two different conversations.
Yeah, Dustin, if you just drop in the comments explaining a little bit more, we will happily get that answered for you. So you touched on it briefly a little bit. What documents does a family need to be able to provide to that loan officer to get this loan and this pre-approval piece going?
So there's a number of things, right? So one, if you're active, you're going to need your most recent LES, and the LES is going to have income information. So income, there are three general areas in any loan program, including VAs, that are important. One is income. How much money do you have coming in the front door? So if you are in the military, right, you're going to need your LES. If you work in the private sector, you're going to need pay stubs that cover the last 30 days. You're going to need your last 2 years W-2s. If you are self-employed, you're going to need your business and personal tax returns, right? You may need balance statements, profit and loss statements if you are self-employed. We're really looking to build that income profile. If you receive retirement pay, we're going to need the documentation to show what you receive monthly for the retirement. Your disability, we're going to need your award statement, right? That says this is how much you receive in your VA disability. If you receive other income streams, then it is documenting that income. So we want to show all of the income that can be used. And I know we'll get to that question in a minute as well. All the income that can be used. Then we need to take a look at the money that's going out, right? So all the debts that are going out. So your credit is going to be looked at, right? Your credit score, your credit report, the debts that you owe. If you owe child support, if you owe alimony, what are those monthly debts? Not your utility bills, not your cell phone bill or your insurance, right? But the things that your formal debt that you owe every month to others that show up either on a credit report or personal loans that you might have. And then it's also taking a look at, so we know how much is coming in and how much is going out, and then your asset position. What do you have in checking, savings, investment accounts, retirement accounts, TSP, what's coming in, and do you have gift funds that are coming in, so that we make sure that if you have a down payment or if you don't, what the closing costs are, where that money's coming from, and it can strengthen an application if you have money left in the bank after you close on a loan and we haven't used your last penny to get you into the house, right? So all of those things are important. So with having bank statements, your most recent quarterly statements from your brokerage accounts, keeping those or having easy access to those.
I will say that this piece of the process, I feel like, is very intimidating a little bit, having to provide all of that. And then just, like, other people now have to see like what my Starbucks habit is. I don't get to hide that anymore from somebody. And then I also wish there was a piece in here where I could like write a letter and say like, we're a more adulty adults than what we used to be. And that debt you see is because we had to buy a new transmission for a car. And it's not like because I needed new shoes kind of deal. Going through it when we went through, I was just like, oh gosh, like, okay, it's a bit scary, but it's actually not. I think, not having done it before, it was that scary moment. I know other people that are just like, yeah, they can see how much I spend on Starbucks. It's whatever.
But I think that goes back to too, right, Megan, working with and having that conversation with somebody that you know and trust and has welcomed you into that conversation and can explain what they need, what they're looking at. I really don't care about your Starbucks unless, now if you want to pick me up one, I might want to know how much you have in your account so you can pick me one up the next time you go. But
yes, absolutely. Is there a one of the things I hear a lot when you go through and purchasing a home is they always say that you shouldn't have any big purchases like within 30 days, like before or after closing. And as a military family, a lot of times we have families coming back from OCONUS locations. They're purchasing a home and they have to purchase a new car because they only had one, they sold one, whatever it is, or they're, because we're moving, it's, well, this furniture is really old, it's falling apart, let's get rid of it. We'll get new furniture when we get into our new home and it'll be like a clean slate for everything. So how does that, like, don't make those big purchases, but you may need to kind of play a role into that pre-approval and loan process?
Yep. So again, I think that's really important to have that good relationship with your lender, and communication is key, right? When you do a pre-approval, and Dustin, this may get back to answering that question for you and how something might change when it gets to an underwriter. If you're working with that loan officer that knows how to look at and read pay stubs, bank statements, LESs, that knows to look for allotments, that knows what income that you can use for qualifying, all of those are really important. And we want to make sure that we get that right. We want to make sure that we get that right up front, which we do, right? So we've gotten this snapshot. We've gotten a pre-approval. You've given me everything. I'm a good loan officer, so I've looked at all of the documents, and this is what you make, and this is what your debts are, and this is what you can afford. And it's a snapshot in time, Megan, right? So that is a snapshot right that day. But you're not closing on a new home that day.
Right.
So we want that snapshot not to change, or if it does, to change for the better when it comes to then closing. So if you go out and you buy new furniture and we have to update your credit, or we get notified that you opened a new account that we now need information on, and we find that you've got now $10,000, or let's just say $7,000 on a new account that you've opened before we've closed, you now have a new debt that has to be counted in your debt to income ratios. You may not be able to afford what you did before. Let's say you go and you buy a car. That car payment may be $600 a month. That could significantly change how much you could afford. And it may not, right? But if you say, hey, Michelle, we're moving back and you're looking at my debts, we're going to have to buy a car. So tell me what would it look like if I had a car payment of $400? Or what would it look like if I had a car payment of $800? What is that going to do to my situation, right? And if we're having that conversation, then there's no surprises. It's and no joke, when I got started 20 some odd years ago on Kodiak Island, I was doing a loan for one of the main contractors there on the island. It was new construction. So this went on for 18 months, right? So we did his pre-approval, buying a house, did his approval. It had to last, right? He was doing construction, so that had to last for 18 months. The last 2 months, the man went out and bought a new car and a boat. And it's like, dude, what are you doing? We're not closed on your loan yet, right? And now you've just added, in his case, $2,200 to his monthly debt. Fortunately, we made it work, but it's that conversation. I don't like surprises. You don't like surprises. So just talk about it. If it's something that can be deferred, don't buy it. Don't buy the new car just because you want to, or get the furniture after you've closed on the house, right? You don't have to have the new car and the new furniture before you close on the house. Get it afterwards. But if there are things that come up, have that conversation with the loan officer so they're not caught off guard, and they can help you mitigate, plan for, or change your thought processes a little bit.
Yeah, no, absolutely. Communication is definitely always key. Dustin, if that helps answer your first question, let us know. If it does not, let us know as well, and we'll dive into that a little bit more. I know you've got another question here. I'm going to pop up here on the screen. Is, would it make a difference if you paid cash or didn't open a loan for that car or furniture?
So absolutely, right? So if you had again, making sure you're having the conversations, because if I've done a approval and it's based on you having, $25,000 in your checking or savings account, and we've got to update that bank statement because they have a life expectancy, right? Things change. We're looking at that snapshot. So after 90 days, 3 months, we need to update that bank statement. In some cases, it's 2 months. We have to update that bank statement. And if all of a sudden you don't have $25,000 in there, maybe you only have 5, but you need 10 for closing now, you're short funds to close. So I think it's helpful. The underwriter doesn't necessarily need to know, but your loan officer does, only from the standpoint if something is going to look different before closing, just have that conversation. But no, if you've got the cash and taking that out doesn't impact your ability to pay the closing costs, No, then it's not a new debt. You're fine.
Perfect. So talking about this income piece and debt piece of things, what is the difference between verified and unverified income when trying to figure out your loan and what you can afford?
Absolutely. And we also call that, what is usable income or
Mhm.
non-usable income? And what do you mean non-usable income? I have it. Why can't I use it for qualifying for a loan?
Yeah. Like
And
every little penny counts, right? So why can't we just include everything that's coming in
everything,
regardless of where it comes from?
everything. So there are actual laws that are written that say that we have to be able to show the government that you have the ability to repay a debt. And to
Mhm.
be able to repay a debt means you've got the ability and the willingness to do that, right? So your willingness goes to, can you, right? And have you in the past paid your bills? That's where credit comes in. But do you have the ability to? And the ability means, what is your consistent income and steady income, right? What can we, without a doubt or very little doubt, say is your monthly income?
Mhm.
So if you've been on a job, right, and you've been on the job for a year, 2 years, 3 years, 5 years, that's consistent. We want to take a look at the last 2 year work history. What has that been like? And that 2 years is the general rule of thumb. What have you done in 2 years? Now, it may not be with the same company, but it might be the same line of work. It might be that you've taken promotions with different companies. It might be that we followed a spouse during a PCS move, but we are back in the same line of work. W-2 income, when you're an employee for somebody, it's easy to document. It's easy to determine the history that you've had there. When you get into other types of income, self-employed, we'll talk about that in just a second. But let's say that you get paid by commission or you get paid bonuses occasionally and you want to have that income considered. Well, again, we have to look at, okay, you got that bonus this month, but have you ever received a bonus before?
Mhm.
That would show that it's likely that you'll receive bonuses in the future. And if we can't show, generally it's 2 year history, if we can't show historically that you've made this money, then it's hard to say that you're going to be able to continue making that money in the future. And same thing with self-employment, right? So, and I think we were talking about, let's say you've decided you want to make a little money on the side and I'm going to go drive for DoorDash.
Mhm.
Great. Have I ever driven for DoorDash before? Maybe I just need a little income today to maybe try to qualify, or I'm bored. So I'm just going to do something for this season or seasonal work, right? I'm going to get a job for the holidays. That's great. And the income that you make, that money that you saved can be used for down payment. You can put it in the bank and save it and all that stuff. But we don't know if that income is going to continue. There's no consistent history of receipt. So we're not going to be able to use that income like you're going to be making it in the future. So it's that future part that makes us that we have to be able to create a likelihood of continuance.
No, that makes a lot of sense with that. So, through this process, what can a family do to kind of help make it easier and smoother for either the pre-approval piece or just the loan in general as a whole?
One, start early.
Mhm.
So if you know, and again, especially you may not know where you're going. We know that we're moving, but we don't know where. I can still contact and start having a conversation with a loan officer because it doesn't matter
Mhm.
whether I'm buying in St. Louis, Arkansas, Florida, or California. I'm thinking I'm going to buy. I'm thinking I'm going to do a VA loan, so I can start that conversation a year out, 18
Mhm.
months out, and just start getting educated. Finding that person that you can have a conversation with. Don't think, oh, if I don't tell them, they won't find out. If I don't mention this, it won't show up. Have the conversation. Your loan officer will be able to help you navigate what does and doesn't need to be either disclosed or documented, or the what ifs. Hey,
Mhm.
Michelle, I know I'm way out, but if I bought this car, what would that look like it versus if I bought this car?
Mhm.
Have those conversations. It creates a very smooth, seamless transaction when you do that. It's when you coming in hot and you don't have all of your information, or you're trying to hide something, that those situations can cause the loan to go a little sideways or start to cause a lot of stress when it didn't need to be there.
Yeah, no, absolutely. And then what else happens with the loan before closing on the home? Is there anything else that we need to be aware of for that piece of things?
Yeah, so we've talked a lot, and really the part that you just want to get out of the way as fast as possible, because it's not the fun part, is the actual getting your borrower, you, qualified. But then we also have the property, right? So when you go under contract, you're going to want to, it's recommended that you have a home inspection, right? Because that's going to help you know what condition that home is in, and if you have any potential issues that may be hanging out there. And then the lender is going to order a VA appraisal on the property to make sure that the home's value is there, that they're going to lend on. You'll have title work that's done on the property to make sure that there's no liens against the property that aren't going to be paid off. You'll know, if there's any encumbrances or any issues that are out there from that standpoint. And then at that there, you're going to need homeowners insurance. You need to start making phone calls then to find out who you want to use to insure the property. And then all of that stuff all gets together. And the VA underwriter says, yep, we're good. And you can close then on the loan.
Yeah, no, absolutely. How can other folks get in touch with you to talk more about the VA home loan?
Absolutely, because I love talking about this. So you are welcome to email me. My email address, very simple, is PCS@caliberhomeloans.com. So PCS@caliberhomeloans.com. Maybe we can just drop that in the chat, Megan.
Yep, I was just typing it as you were saying it, so it is dropped now in the comments, so you guys can easily just go copy and paste. If you are looking to be purchasing soon, within the next 12 months, think you're coming down on PCS orders next year, regardless of where you're moving to. Michelle, she's got a great team that she can set you up with to get you connected, where you can start having these conversations and start looking at what you need to do, or maybe look at what your pre-approval may be, if there's things you can do in the meantime to kind of help boost what you could afford, boost your interest rate, whatever it may be. Yep. It's a great time to start having those conversations about all of that. Is there anything else that we missed today that we need to know about before closing a home with the VA loan?
We've scratched the surface, but I think that was a lot of information. Yes. So we will hold some for later.
Yes. Yes, no, absolutely. We're going to, like I said at the beginning of the show, we're going to have Michelle back several times, as we're going to be breaking down everything you need to know about the VA loan. So when you come time to purchase a home and you want to use your VA loan, it's not such a scary thing to go through, and you can go in armed with a little more information about the process and all the little details surrounding it. So Michelle, thank you for taking time out of your day and joining us today.
Always a pleasure, and great to see everybody.
And everyone else, thank you for tuning in and watching with us today. Remember, we're going to be this day from here on out, Tuesdays at 9 a.m. Again, coming to you a little bit early because life has changed over here. So join us, grab your coffee, and we'll start our days off together. Join us again next Tuesday. We got another great show lined up for you as well. If you're going through a PCS and you're having any issues or concerns or questions, please don't hesitate to reach out. Happy to help in any way we possibly can. And until next week, everyone, take care of each other.